B. Individual disability income insurance. An individual disability income policy is applied for and paid for by the individual rather than through the employer. As for group disability income, individual disability income premiums are paid with after-tax dollars, and benefits are not income taxable. B1. Basic total disability plan. A total disability plan protects the family or an individual against the economic losses that come with the total disability of wage earners. Income benefits, monthly indemnity. Most often, benefits are paid monthly, but could be paid weekly in some policies. The amount of benefits is stated in the policy and is usually limited to the percentage of one's income at the time of application to prevent overinsurance. Elimination and benefit period. Elimination period is a waiting period that is imposed on the insured from the onset of disability until benefit payment commences. It is deductible measured in days instead of dollars. The purpose of the elimination period is eliminate coverage for short-term disabilities in which the insured will be able to return to work in a relative short period of time. The elimination period found in most policies range from 30 days to 180 days. Just as a higher deductible amount results in a lower premiums for medical expense insurance, a longer elimination period transferred to a lower premium for disability income insurance. An important consideration in selecting the elimination period is that payments are made in arrears. Therefore, if the insured selects a 90 days elimination period, the insured will be eligible for benefits on the 91st day, but the payment will not begin until 121st day. The insured must determine how long he or she can go without payment following disability in selecting the duration of the elimination period. Benefits period refers to the length of the time over which the monthly disability benefits payments will last for each disability after the elimination period has been satisfied. Most policies offer benefits up period for 1 to 5 years and at the age 65. Some plans offer lifetime benefits. The longer the benefit period, the higher premium will be. Injury is defined using either the accidental bodily injury definition or the accidental means definition. Accidental body injuries means the damage to the body is unexpected and unintended. Accidental means the indicates that the cause of the accident must be unexpected and unintended. A policy that uses the accidental bodily injury definition will prove broader coverage than a policy that uses the accidental means definition. Sickness or illness is defined as either a sickness or disease contracted after the policy has been in force at least 30 days, or sickness or disease that the first manifests itself as a policy in force. There often the insurance company will allow the insured to have different benefit period for injury or sicknesses. For example, the insured could apply for benefit period of 5 years of sickness, but to age 65 for accident. Recurrent disability is generally expressed in a policy provision that specifies the period of time during which recurrence of an injury or illness will be considered as a continuation of a prior period of disability. The significance of this feature is that recurrence of a disabling condition will not be considered to be a new period of disability, so that the insured is not subjected to another elimination period. Waiver of premium feature. Waiver of premium is usually included in a basic disability income policy. This benefit allows the insured when disabled to forego pay the premium once he or she qualifies for benefits. Premium that were paid by the insured during the elimination period are usually refunded once the insured qualifies and begin receiving benefits. B2. Individual premium consideration and coordination with social insurance. Premium payments on personal owned disability income policy are non-deductible by the individual. However, disability income benefits are received income tax-free by the individual. In order to avoid overinsurance, the insurance company have several options to work with Social Security benefits. Additional monthly benefits. Some insurance companies offer the additional of monthly benefit rider in the approximate amount of that Social Security would pay. The benefit only is provided for 1 year. It is then anticipates the Social Security benefit would commence at the end of the 1 year. Social insurance supplements. The insurance company may offer social insurance supplement rider, which will pay a benefit in the approximate amount that Social Security will pay. But if Social Security does in fact pay, the social insurance supplement benefits is deduced dollars for dollar by the Social Security benefits payment. Social insurance supplement rider are used to supplement or replace benefits that might be payable under Social Security disability. These provide for the payment of income benefits generally in 3 different situations. 1. When the insured is eligible for Social Security benefits, but before the benefits begin, usually 5 months waiting period for Social Security benefits, with the payment of benefits begin on the 6 months. If the insured has been denied coverage under Social Security, roughly 75% of people who apply the Social Security benefits denied coverage because of their rigid definition of total disability. 3. When the amount payable under Social Security is less than amount payable under the rider. In this case, only the difference will be paid. These riders can also be used to replace or supplement benefits payable under other social insurance programs such as worker compensation, occupation versus non-occupation coverage. Health insurance, including disability insurance, can be written on an occupational or a non-occupational basis. Occupational coverage provides benefits or illnesses, injury or disability resulting from accidents or sicknesses that occur on or off the job. Non-occupational coverage, on the other hand, only covers claims that result from accidents or sicknesses occurring off the job. While many individual health policies are written on an occupational or non-occupational basis, most group plans are non-occupational only. It is assumed that accidents or injuries occurring on the job will be covered by workers' compensation coverage, cancellation, and renewable. The insurer has the right to cancel an individual accident or health policy within the first 90 days after it's issued, as long as the insurer provides a 10 days notice to the insured. The insurer must return any unearned premium on pro-rata basis. Typically, disability income policies are renewable until insured age 65. The continuation of coverage rider provides the insured can renew the policy after age 65 as long as they are active and gainfully working full-time.